Most traders are sitting on a gold mine of insights and don't even know it. In this video, I'll show you how to dig into your trading journal the right way and uncover exactly what's holding you back. After reviewing hundreds of journals over the past 10 years, we've discovered that every profitable trader follows the same review principles. I will walk you through them step by step so that you can start improving your results today. The first question we ask when looking at a journal for the first time is the trader profitable now? In this case, you can see the net return is quite positive, and also when we switch to the percentage return, we can see 37.37% over 77 trades. So this trader is really profitable. And this means the way for this trader to make even more money is by either 1, improving his win rate to have more profitable trades, or push the average P&L so that he makes more money on his winners and loses less on his losers. Let's tackle the first part. Can we push the win rate to get more profitable trades? So this trader has a win rate of around 30%. And if we would also take into account some of the break-even trades, which you can see here, 16 break-even trades, his win rate would go up slightly. However, there's a little bit more room for improvement. And realistically, a win rate of around 50 to 55% is often achievable. So there might be a little more room, but not too much for this trader. So how do we get the win rate up? Of course, you want to reduce the losses. And for that, what we can do is we go to the journal and we want to look at the tilt meter. The tilt meter shows us how disciplined is the trader and how often is he following his rules or breaking his trading rules. So we can see that the tilt meter is almost always green for this trader. This shows that he's following his trading rules very well. We can also go to the efficiency graph here, and we can see the efficiency is around 82–83%. And this means that on most of his trading decisions, he's following his rules. And this means that in his data, he doesn't have a lot of bad trades where he's breaking his rules, of course. And this means that improving the win rate is not as simple as just trying to look for reducing the trades that are outside of his trading framework. So we need to find underperformance in his trading elsewhere. So let's go to the setups here, performance by setup. And we can see he is trading 4 setups. 2 of them are quite profitable and 2 of them are underperformers. The London setup is underperforming. He has 16 trades with a net loss of 4,000 US dollar. So there might be a little bit of room here if we would be able to improve his London system to get his win rate up, because he has 11 losses here. What you could then do is try to dig deeper into the London trades. So opening the basic filters, we can only look for our London trades. Let's go then to the efficiency, and we can see the efficiency started here around 66% and now is already here at 81–82%. So even though he is having quite a few losers here, 11 losers out of 16 trades, he's not really breaking his trading rules and he's being really disciplined. So there aren't a lot of bad trades in here, and mostly the trades are following his rules. So why is the London setup underperforming? I went to the trade management graph here, and this was really insightful because what we can see here is that the potential performance, the green line, is above the actual performance. So it means potentially he could have made much more money if he would manage his trades a little bit better. Looking at the feedback box here, we can also see that this is what the graph is suggesting. He is cutting winners early, and this is limiting his profits. I wanted then to see his whole trade management graph across all of his trading data, and we have a same picture. So he's currently making 36 R, but potentially look 119. So he's losing 83 R by mismanaging his trades. This is quite the huge difference here between the two graphs. And this is typically not what you see in a journal where the trader is already that profitable. So I suspected that this graph doesn't fully reflect the reality because the difference is here just very, very large, and it's typically not what you see in a profitable journal. So I went into his journal again and I scrolled a little bit here to the right to get to the OTP field. And this is what drives the trade management graph. I just made a video on how to use the original take profit field, but let's dive into this. And I found a few trades where he is using the OTP wrong. So let's take a look at this trade. He ticked the OTP with yes. And this means that if the trader wouldn't have interfered with the trade, this trade would have hit its original initial take profit before it would have hit the stop loss. Luckily, this trader has screenshots. I opened the screenshot, and what you can see is here. He entered here a short trade. The price went to his stop loss and didn't reach the take profit. So here, the original take profit would not have been hit. And this trade therefore doesn't deserve the OTP hit yes. It should have been tagged with no. And what I suspect is that's going to be the case on a few other trades here. And that's why you see this very optimistic and frankly, unfortunately, not 100% correct view of his trading data. Initially, we could have assumed that the London setups are currently not working because he's mismanaging them, but the potential for improving the profitability of his trades might still be there, but it's probably not as significant as it's shown here. So the first tip for this trader is to go through the trades on the OTP and correct them. And then you will have an accurate picture of your trade management efficiency. I would still suspect that his potential performance might still be a little bit above the actual performance, but the difference is probably not going to be as significant as it seems here. So let's remind ourselves, what did we just try to do? We tackled the question, can we push the win rate to get more profitable trades? So I would assume that there is still some room to improve his London trades. They are currently not working. 16 trades is not the largest sample size, but it's definitely something that a trader needs to look into. We also see the difference in the win rate here at the bottom. The New York trades are giving him a 40% win rate, where the London trades are only 18.75. So in order to get up the win rate, I think the first step would be to look into the London trades. What we have also seen in recent reviews is that trading systems might overperform in some sessions and some part of the day and underperform in other sessions. So when we go to the performance by time and we check for the hour of the day, it is really obvious that in the first half of the day, around the London Open, he is not doing well. But then here, when the New York session is opening around here, he is making most of his trades. Let's zoom in here on the 30-minute intervals. And this is right here when the New York session opens. And you can see after that, he has his most profitable session. In other reviews, we have said that such traders might also choose to reduce their trading times. So in this case, one possible way to go forward for this trader would be to just focus on trading the New York session and maybe completely neglect the London session. And that would also free up a lot of time for this trader. However, the first thing that I would recommend is try to get your trade management graph in order, go through your trades one at a time. On the other hand, the sample size on the London session is not really great. He has 16 trades, so he could also choose to trade the London session for a few more weeks. Maybe wait until you have 40, 50 trades and then see if your statistics change, and then make the decision of if you are going to abandon the London session or continue trading it. Remember, in the beginning, I said for a trader to become more profitable, he has two options. Either improve the win rate, which we've just tackled, or second, push the average P&L so that he makes more money on his winners and loses less on his losers. When we go to the Home tab, what we can see is his average P&L is quite good. The ratio here is 3.5 to 1. So he makes 3.5 times the profit compared to his losing trades. This is a really good ratio here, and pushing the average P&L might be also not as easy. The easiest and simplest way to push your average winning value of your winning trades is to let winners run longer. And again, this is going to be here the key to all of this, the trade management, because currently it suggests that the trader is mismanaging his trades and he's leaving a lot of money on the table. Unfortunately, the trader doesn't have exit analysis. This would be really helpful in such a case when you want to analyze if there's more room for your winners and if there's a way to push your average P&L. In other reviews, we have seen that sometimes It might even be possible to move your stop loss a little bit closer to your entry while leaving the take profit unchanged. Having a smaller stop loss while keeping the take profit the same is going to boost your reward to risk ratio. And this means reducing the size of your average losing trade and boosting the reward to risk ratio on your winning trades. Unfortunately, the trader doesn't have that. However, he has a lot of screenshots. So what he could do is open the trade and then under advanced trade data, enter price values for highest and lowest price levels. This is something that is not always recommended and not necessary for new traders. Traders that are not yet profitable typically don't need to work on trying to boost your reward to risk ratio. In the beginning, it's mostly about trying to be more disciplined and start following your trading rules a little bit more. In this case, however, the trader is already following his trading rules really, really well. So the focus of your progress and the focus of your area for improvement is slightly different for traders that are already profitable. I would really recommend to enter the highest and lowest price for this trading journal. And that will then unlock your exit analysis graph. And then we can really nicely see how the trades play out. How is the price moving towards the take profit, towards the stop loss? Maybe he's setting his take profits a little bit too optimistic as well. And the price is often turning ahead of the take profits. And then we could also think about moving the take profit a little bit closer to the entry, which would help him realize more winners when the price isn't turning ahead of the take profit. Those are all really interesting things that I would really like to investigate with this trader going forward. We will reach out, of course, to this trader with the review and then hopefully give him some inputs and maybe come back to this journal for a second round.